Then, good evening, friends. I am Somesh. So, I am a stock market trader, and I have been doing trading in the stock market for last 7 years. And prior to that, I was in corporate world. I was in Airtel, Aircel, Reliance, so many other companies. And that time also, I was doing trading. That was like positional basing, like investment kind of thing, and all those things. So uh, that's how my journey started. When I started getting good profit in trading, and I started having explored some strategies which I used a lot. Then, then I thought, let me give it a try in stock market trading, and I quit my job and I started trading full time from 2017. April 2017. So this is a brief introduction about me, and the journey so far has been quite fruitful. I have seen quite a good profits and quite a good losses also. So stock market per se is a 50-50 game. Like you have a chance of 50% of winning of winning in stock market, or 50% chance of losing. So, whenever when people think of stock market, first of all, they think it's just kind of a gamble. And I want to break this myth. It's not a gamble at all. Yeah, it's not a gamble. If you have studied it properly, then you can trade, and you can earn a living from stock market trading or investment also. So those value investors, what they do, they put a huge chunk of amount and they buy a share, and they wait for market to go up or the share price to go up, and they sell the product. So that's how it works. Now, before I go further, I want to share one more insight, that whenever you trade or whenever you invest, you don't put 100% of your money in one stock or one trade, because you never know what the stock market would be behaving, because stock market is not under our control. Is what is on our control is our strategies, our stop loss, our risk management. That's it. So let's begin with what are the analysis which we can have before we enter into a stock, or before we make a position. So I'll just share my screen.
Yes, I'll provide you the host, right? Just a second.
Yeah.
Sir, you may share your screen now.
So this is basic to advanced workshop, because I don't know how many of you are actually know about what is the stock market, what are the stock price, how we come to know that at what point we should buy a share or sell a share. So it's just a kind of a little bit of basic and some kind of advanced strategy into this stock market analysis. So I run a trading desk which is called Somis Trading Mentorship and Lessons. I have few traders under me who work for me. So let's get started. Yeah. So what are the strategies that we use as an investor? Primarily, we should think of ourselves as an investor. We would go by world market, how the world market is behaving. Like in last year in March, world market fell when the corona outbreak happened, pandemic started. So we know about what the world market is behaving like, then we can make a position, or we see which sector is performing. Like nowadays, hotel industry or is not performing at all, or the aviation industry is not performing. So their performance was good in the past. It may be it somebody is doing something. What? Hello?
Yes, sir. Just a second. Let me check.
Somebody is. Anyways, we'll go by, and we are totally dependent upon. Prashant, can you erase all these things, because this is creating a lot of
Yes,
disturbance.
yes, yes, sir. I'll try to erase it. You can continue till then.
So, and we heavily dependent upon the tips and the rumors that we get either from the business news channel, or from the newspaper, or from word of mouth. Somebody told us our friend told us buy this stock or buy Reliance stock, it would be doing very good in next 6 to 7 months. We buy that stock. Just it's a good name, but we don't know why to buy that stock. Just a good name. That's why we buy the stock. Yeah, it should not happen. Then what should be the strategy to buy a stock? We should know which stock to buy and at what price, and the target for that stock and the stop loss. Suppose if the stock is not working as per our wish, then there should be a stop loss. That know that the minimum price point at which or the minimum loss which we can take on a particular position, and the time frame. In what time frame the stock would give us a return, say 5%, 10%, 20%, or 100%, it may be. So 100%, 200%, that are multi-bagger stock. So in what time frame the stock would going to give us what kind of return? Now for that we need to analyze that stock, isn't it? And there are two types of analysis, which are fundamental analysis and the technical analysis. And what is technical analysis? Let's get started to know about technical analysis. Just
Sir,
tell me.
sorry to interrupt. Could you please reshare your screen so that the disturbance over the screen could be removed?
Okay. Wait a
Uh,
minute.
please provide me the host rights once again. I'll just try to erase it, and you can then again share your screen.
Sir, there is an option to clear drawings. You can try that, sir.
Sir, you might find it in the annotation section, or else, sir, you please try sharing your screen again so that it probably might have been cleared.
Hello. Hello. I cannot share the screen, Prashant.
Yes, sir.
Yeah.
I'll just provide you the rights again. Yes, sir. You may share your screen now.
Now is it done? Can you see my screen?
Yes, sir. We can see your screen.
Should I start again or should I?
Yes, sir. We can continue from where we left.
So now I was here only. So what is the technical analysis? So in technical analysis, we think about or try to see the technicality of this stock, as the name suggests. We think of the intrinsic value of a share. No, we don't look for the intrinsic value of the share. We just see the price point, at what price the stock is trending and where it should lead to. It also depends upon the factor of demand and supply. If the demand is more, then stock would go up. If the demand is less, stock would go down. So it's a complete demand and supply game. It's a study of predicting future price movement. Currently, stock, if a price is at 100 rupees, where would it go? Would it go to 102, 105, 110? And at what time frame, as I told you earlier? So let's get started. What are the tools available to know the technical analysis to predict the pricing of a stock? So this is done on the chart. What type of chart do we have? One is line chart, one is bar chart, and the third is candlestick chart or the Japanese candlestick chart, because it was invented by Japanese. So that's why it is called as Japanese candlestick chart, and it's primarily used all across. So this is line chart. It doesn't tell you anything. It just tell you where the stock price is moving. The line which is coming up to down, that is shows that the stock price is moving down, and then it is going again up. It just shows the highest price point at that particular interval. The bar chart has the upper portion is the high on any of the candle that you see. It shows the highest price point in a particular day, the lowest price point in a particular day, and the two wicks that you see is the open and the close. Now this is the Japanese candlestick chart, where you can see the red candles or the green candles. These are the Japanese candlestick chart. This is primarily used in the technical analysis. Why? I'll tell you how. So the green is buying and the red is selling. So on a particular day, if you see the green candle, on that particular day, the stock price has went up. That's why it is in the green. On those red candles are those candles on those days when the price went down, closed on a lower price point. That's why it is red. And what are the things that we need to see in candlestick? We need to see open, high, low, and close. Yeah. at what price point the stock price opened, and it went till what point, what is the highest point at which the stock traded during the day, and the lowest point, and at what point the price closed. So each candlestick is 1 day data. On a one certain day, at what point stock made a high, at what point it made a low, at what point it opened or it closed. It started in Japan in 1600, just to evaluate the rice contract. At what point the rice was being sold at that time. They used to note all the price point. So this is how it looks like. Yeah. So the highest of the candle is the high price, and the body that you see, the square that you see, is the close point or the open point on the lower, on the green candle, and the low point is the lowest point at which it traded. While in the red candle, the close is on the lower side and the open is on the higher side, because the price moved down from open to close. Yeah. Now, what are the important levels in a candle? First, as we know, high, close, low, open. These are the 4 things. The 5th thing, which is very important, is the mean of the candle. The highest and the lowest point, average of those 2 parameters, is the mean of that candle. The mean is also very important to evaluate. Again, somebody is doing something. I don't know. Why is it happening? Anyways, now, as we know, we have discussed this thing, open, high, low, close. Yeah. How it started? It started with the Dow Theory. In US market, there's a one index which is called as Dow Jones, which is named after this genius, Charles Dow. He invented the theory which is known as Dow Theory, and he is known as the father of the modern day technical analysis. What is the brief points in Dow Theory? The brief points in the Dow Theory is the market moves in a trend. If the market is going up, then it is uptrend. If the market is going down, it's a downtrend. Yeah. And what confirms a trend is the volume. On one particular day, if the market is up, trending up, on one day, the volume was 1 lakh share on a particular share price. Suppose Reliance or a Bata shoe company, yeah, 1,000 share or 1 lakh share it traded. The other day, the next day, it traded 1,20,000 shares. So the volume is also increasing. Market is going up, Bata share is going up, and the volume is also going up. It means the trend is intact on a higher side, and that this is how the trend looks like. This is called as uptrend. Market is going up and up and up and up and up. And what is the downtrend? Market is going down and little bit going up, then again going down, then little going up, then again going. Well, it's going down on a particular time period. And the other thing is sideways trend. Market went down in this picture, but after certain days, it started moving in a range only, like it's moving in a box only. This is a sideways trend. Market is not neither going upside now, neither going downside. It's a sideways. It's moving in a box only, rectangular. So these are the 3 kind of trend we can see. And what are the trends line? Now, in this picture, we see the market is going down. The upper line which you see, which is going from up to down, is the resistance line. Resistance line. What does resistance line mean? That market or the stock price is not able to break this line. It has a resistance on this line. This is drawn in technical analysis, or the technical analyst draws such lines on a chart to understand where is the resistance on a particular stock. This is also a horizontal line. In this stock, the market is on a sideways trend, and the upper line which you see is the resistance line. When this is broken, then the market started, or the breakout happens, then the market started going up. The stock price started going up. Okay. Now, volume. As I told you, when we identify trend, then we see how the volume is behaving. If the volume is also going up, if it is not, then the trend may not be sustaining in. Important element of the technical analysis. This volume is very important technical analysis tool, which provides the intensity of the given price move. Low volume means even the stock price is moving up. If there is no volume, you make a position, you can buy a stock market, but that decision would be futile because there is no volume. If the volume is not there, then you won't be able to gain any benefit out of it, because ultimately the price will not go up. When the high volume happens, there are two things happen. One thing, the stock price would either go very up, or from making a very big top, it will start coming down. And how would it come down? We will see. That is called as reversal. We'll see in next slide. So this is the volume. You just see on the top, on the bottom of the picture. On the left hand side, you see the low price band. The stock price is not that much moving. Then in the middle of the picture, you can see that gradually the volume started picking up, and also the price of the stock is also going up. So that's the very important thing. You need to see if the volume is also increasing with the price of a stock. Now, as I told you, the trend reversal, how it happens. Market is going down. Here is the breakout. Volume is also increasing. It started going up. But after making it top, it may come down. How would it may come down? I'll just tell you in a few slides. The other important aspect in technical analysis, which I thoroughly study and apply in my technical analysis, is the moving averages. What are the moving averages? They are the indicators which shows the average value of a stock price. As the stock price changes, so does the average value of the price would change. So the time period on which you are using a moving average is also very important. So I use moving average of 5 days, moving average of 13 days, and moving average of 26 days. And how do I apply into the technical analysis? We'll see. So there are two types, or rather three types of moving averages. One is simple moving averages, which we call as, in simple terms, DMA, daily moving averages, or the SMA, simple moving averages. Those who are having a good knowledge of stock market, they would be knowing that what is DMA, SMA. The other thing is exponential moving average, EMA, sorry. The third one is weighted moving average. And how it is applied, I'll just tell you. So this is the strategy. As I told you, that we use EMA of 5, EMA of 13, and EMA of 6. So the line which you saw on the chart, the white line, the yellow line, and the purple line. The white line is the line of EMA 5. And the yellow line is the line of EMA 13. And the purple line is of EMA of 26. So now when you see on the bottom, EMA 5 line is crossing EMA 13 line here at that point, and then it means and below this you just see the volume is also increased on that particular day when the EMA 5 line has crossed EMA 13 line. Now you wait for a few more days, you just see. Then EMA 5 line again also crossed, the white line also crossed the purple line. It means it gave you a clear indication that you can make a position or buy a particular stock when EMA 5 line has crossed from below to upside. Yeah. And then you can make a position, and you just see the volume in on when the EMA 5 line crossed EMA 26 line, the volume has also increased at that time. And what happened then? From that line to stock prices move up. You see, it just a profit of say 20 to 25%. In what I think in a month, maybe 30 or 35 or 40 candles are there. You see, that's how the buy signal we can identify. Just by looking at the volume and looking at the EMA 5 line is crossing from below to EMA 13 line and also crossing EMA 26 line. Now, what is the sell signal strategy? The same thing. When the EMA 5 line from upper side is just going below, crossing below to EMA 13 line and EMA 26 line. And just see the stock price and the volume also. If you see, the volume here has increased. It was not that much increased, but on particular time it was increasing. And then how the price went down. So simple strategy, isn't it? Now, there is third strategy or the second strategy. When EMA 5 line is crossing on the same day to EMA 13 line, and on the same day it is crossing the EMA 26 line. See on that red green candle, all three EMA lines are crossing a single point, and how the price moved up. Yeah, and the volume you see on that particular day has moved up. Yeah, this is the second strategy, which I use very commonly in my stock trading also. And the third strategy, this is now we have till now seen the use of volume with EMA 5, 13 and 26 strategies. Now I want to take you to one more strategy where I will use one more indicator, which is called as RSI, relative strength indicator, which tells you the strength of the price, if the price is actually moving or not. Even the volume has come up, even the EMA 5, 13 and 26 all crossed on the upper side, but still the price has, maybe some operator, some big guns has bought the stock, and when it started moving, then he can dump the stock after booking his profit. Then you are a retail trader, you will be at the mercy of the stock market or the big operator, you see. So for that, to negate that issue should not happen, you use another indicator, which I use very commonly and very ferociously in my stock trading, is the RSI. I already told you what is the support, what is the resistance. Yeah, in that particular line, you just see where the you see the circular eclipse where the EMA 5, EMA 13 and EMA 26 has crossed, and on the below the RSI indicator is also making a breakout, means on the resistance lines of RSI it is going up, which shows the strength of the price is intact. So you actually can buy a stock. Yeah, if you have buy that stock on that particular price point, it moved from there to there, and it never came down to a support line. You just see, it never came down to a support line. So your stop loss would never hit, and you see the stock price is moving so very up. Yeah, from 190 it went up to 226. This is the latest chart I am telling you. The day the price breakout happened was 191.30, and after that the stock price is currently trading at 226. This is RBL Bank latest chart. This is how we have used RSI combined with our resistance, combined with our EMA, and combined with our volume. Just see the volume on that particular price breakout. Just this standing line, if you see the dotted line, that day the volume has grown. On that, that volume has never been seen in that stock price. Yeah. Now, this is the downtrend strategy. The same strategy, EMA 5, EMA 13, and EMA 26 is crossing on that particular price point. Yeah, here it is crossing, and this is our resistance level. When RSI breakdown happened here, and see the fall in the price. This is the Mindtree chart. From 926 is went up till 326 or 300 something. So what a fall in the price. Now, if you see on the right hand side, the EMA 5, EMA 6 and EMA 26 has also gone up. There also you can make a position, buy a position, yeah, in the stock. This is one thing. And the fundamental analysis. I told you how to make a position. You can do your trading based on these things. Combination of RSI indicator combination with EMAs 5, 13 and 26 along with volume. These three things would give you a fair idea if the we should buy a stock or we should sell a stock. Now, fundamental analysis is, you see, in that you have to study a lot more things, like the year high on a particular day. Like suppose we are running into 2021 and just see the price of suppose Reliance. What is the highest point it has traded till now, and what is the lowest point it traded till now? The ratio of that high and the low should not be greater than 2. Second option, second thing which you need to see is the promoter holding. The promoter, the Mukesh Ambani, should hold minimum 50% of your shares, and the rest 50% should be with the retail investor or other institutional investor. Yeah. So second thing means the promoter is actually having a say on the company because he holds maximum shares in the company. That's what it says. Yeah. Company paying out dividend or not? If the company is paying out regular dividend, Reliance is paying regular dividend or not? Yes. So that's why you can go for Reliance. You can actually see that example because it's a wonderful example. Here, high and low is Reliance is less than 2 always. Promoters holding, Mukesh Ambani is holding more than 50% of its company share. Company is regularly paying out the dividends. So no point in this. The stock price should be trading about 200 SMA. As I told you, there are 3 types of moving average: simple moving average, exponential moving average, which we use our technical analysis 5, 13, 26. Yeah. So in the fundamental analysis, we use the SMA, simple moving average. It's the average of the stock price of previous 200 days. Suppose almost an year, almost. Yeah. If you take 365 days and on so many holidays and all those things, and stock market work on 5-day basis. Yeah. And the book value per share should be greater than the current market price. And the current CMP is current market price. And CMP is 15% below the base price. Base price is what? Base price is calculated by taking average of weighted stock price of over last 3 years. Yeah. And the net sale per share. The company, whatever product it has sold and the whatever profit it has earned, yeah, if you divide that sale with your total number of share the company has, that value should be less than the current market price. If you identify 1, 2, 3, 4, 5, 6, 7, 8, all these 8 parameters, and all the answers are in yes, are in positive, then in that stock you blindly put your money into, isn't it? This is I also use very frequently in my investment things. So now we will come to the interpretation of candlestick chart. There are few patterns which are like neutral patterns, bullish pattern. Bullish pattern means bull. Bull is coming into the market. It means it will take the market to the newer high. A bearish pattern, market will go down. A neutral pattern is like sideways, as I told you earlier, sideways pattern. Neither market is going up nor going down. It is on a, in a, what do you say? It is trading in a box only. Sorry. Neutral pattern, these are the names, these are the terminology. Dragonfly, gravestone, spinning tops, and Harami pattern. Don't go by name Harami pattern. Harami is a Japanese term. Yeah. Yeah. This is the neutral pattern. Here, the high is on the upper side, low on the lower side, and stock price open and close is same. That's why it is showing as a sleeping line, very thin line. Yeah. Neither market is going up on that particular day, not the stock price going down. It closed and opened and closed on the same price point. This is gravestone, yeah, type pattern. This also, thus green candle and then very small red candle. What is bullish pattern? These are the name: bullish piercing, bullish angle, hammer, and morning star. What are these? You see, the first candle is red candle, and the second candle and the sleeping line that you see, black line, is the mean of that red candle. Yeah. And the second day, the green candle form, and it has pierced the red candle, and it went closed just or above the mean of the red candle. So this is kind of a bullish piercing. What is bullish angle? This is angle. The green candle has anchored the previous day red candle. Means the pattern may be turning into the bullish. This looks like a hammer, isn't it? So, and the green color hammer. This is a market was going down, and then one day the green hammer was formed. It means market may turn into the bullish mode. And this is morning star. Market was going down. It made a big red candle, and then on the other day it made a doji or the neutral pattern below your red candle. Then on the other day it made a big green candle and closed above the mean of the previous red candle. It means the market is turning into the bullish mode. And what are the bearish? Market may go down. This is like this. Same opposite of bullish is the bearish pattern. This is bearish piercing. The red candle has pierced the mean of the previous day green candle. And this is bearish engulf. Red candle has engulfed the previous day green candle. And this is evening star. In that was morning star, now it is evening star. You see, these are just the name. Yeah, you see, it was going up, 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 and with so much of gap up. The two slanted line that you see is a gap up. Then again, what happened? It made a hammer here, price pattern. So price always moves in a trend, isn't it? If the price trend is up, the price will also go up. If the trend is down, prices also go down, isn't it? The price move always in a trend, but trend never stays forever. You see, life never remains the same. Yeah, days never remains the same. Tuesday, after Tuesday would come Wednesday. Yeah, after Wednesday would come Friday, Saturday, Sunday. Yeah, so that's how the market goes. So a change in the trend can be said as a change in the expectations of the investor and trader. With this change, the price of the chart forms certain pattern or formation, categorized mainly into the reversal and continuous pattern. Price pattern gives price target. Price pattern gives time target, a major opportunity to capitalize on. How? A pattern, we will see the reversal pattern. Reversal pattern, bearish. This is called as head and shoulder pattern. We have seen what we have seen learned till now. We have seen EMA 5, 13, 26. We have seen its combination with the volume. We have seen then again the importance of RSI. But by doing so only we will invest? No, we will see some kind of chart also in. This is called as head and shoulder. You see the big round on the side is like a head, and the other on the left and the right hand sides looks like a shoulder. So this is called a head and shoulder. It means the market is going to go down. This is the market is going up, up, up. Then it again little go down, then again up, and it make a double top. On the top, the sleeping line that you see is making a double top. Means from here market may come down. Bearish wedge. Market was little going down here. It went up quite a lot. Then it started coming down. It means market is maybe going down. Lower edge. This is an start of the wedge. And here is the target. Target when it go down would be like this. Up we will see the bearish pattern. Again, what is it? Opposite of bearish pattern is the bullish pattern. Here you see the head and shoulder is forming on the upside down. Yeah, the market may be going up. In bearish, we saw double top. In the this thing, what is a reversal of bullish pattern, we will see the double bottom and then rounding bottom. When for 5, 6 years, 7 years, there are certain stocks which don't move. When after 6, 7 years, they just give a they just give a spike of price, and they just start moving here and there and go really furiously very up. This is called as rounding bottom. This is bullish wedge, yeah, and the target is this much, yeah. This is a up flag. Here, the market on the left hand side, the market was going up. It's like a pole it made. Then it was in a sideways direction. And whenever the breakout happens, it will give you a big target. This is called as up flag. This is again a flag triangle. The same kind of a chart it is. Breakout above multiple top. You make a resistance lines here. The white line that you see. Yeah. When the breakout happens, the price closed above this white line which you draw. You can see how the price has moved up. Even though if you see the purple line on the EMA 5, EMA 13 and EMA 26, crossing has happened little before the breakout happened. You can make a position there also, and by looking at the volume, and then you can make a position after the breakout has happened. Choice is yours, but it is always better to see the combination of all three: EMA 5, volume, RSI, and the breakout or the flag pattern or the chart pattern. This is a down flag. Again, the market, the price may go down from here. Now, how to trade and invest? So till now we have seen importance of EMA 5, 13, 26, EMA of value of volumes in stock price, the pattern in the chart, then how to trade and invest. You have to make an analysis before you making a investment or to trade. You just which stock are you working on? Suppose you are working on a stock to name Reliance. Yeah. At what price are you doing this analysis? Put that date. On that day, at what price the Reliance is closed? At what price point? Say around 2236, suppose. Yeah, it closed. Does it close in a green candle? As we shared, green means buying, red means selling. So last candle was green. If yes, then you make a tick mark. Last candle green with increased volume. If the volume has increased from the last previous 3-4 days, yeah. If the volume is continuously increasing, then again you make a tick mark. So these are giving you a comfort level that you are doing a good analysis, or you maybe tend to buy a good share which thoroughly analyzed. And then what will you see? What will you see? 513, 526 or 513.26. This crossover has happened from below to upper side in last 4 days. If yes, then again make a tick mark. So all these tick marks would give you the comfort level to invest or trade in a share. And the price pattern, as I told you, bullish wedge. If you are investing, then you will buy a share. Yeah. Then you have to see all the bullish chart pattern, bullish wedge, up flag, inverted head and shoulder, double bottom or rounding bottom. If any of this chart pattern has happened, then again tick a mark. Okay. And then support. Support is what? From the lowest point which you think, or the support line you have to draw, as I told you, the resistance line, the support line on a bullish share would be on the lower side. And the resistance lines on a bullish share would be on the higher side. Yeah. So support is always below the close and the resistance is always above the close. So if you see last candle green, tick mark, last candle will increase volume, tick mark, EMA 513.26 happened, tick mark, bullish wedge or any of the chart pattern happened, tick mark. So you got 1, 2, 3, 4 tick mark. It means it's giving you a comfort level that you can buy a particular share. Or final conclusion would be yes, buy a share. And the risk appetite, you have to risk and reward ratio. You have to see how is the risk. Risk is closing price is less than or subtracted from stop loss or the support price. Reward is target minus closing price. So risk reward ratio. Final conclusion: if the risk reward ratio is coming as 1:1, you can still go ahead. And the risk reward ratio, risk is 1 rupee, reward is 3 rupees, or the risk is 100%, reward is 300%. Then you can blindly go and invest in that particular share. So this is consistency is the key to success. Yeah. First practice at home watch so many chart, try to practice, try to draw support line, the resistance line. Yeah, keep practicing. Then only you test the water in the stock market. Yeah, minimize the risk and maximize the profit. Without a system of discipline for decision making, fear and greed will undermine skills. People may fear that no, whether I should buy this share, even if all the positives are coming, all the tick marks are in green only. You are the verdict is that you can buy a particular share, but you are feared of, you are scared of if my money would be lost or not in the stock market. If you are that having that much of fear, don't, as I told you in the beginning, don't put all your money in one share. Keep at least 1/10 or 1/5 of your money in one share. Yeah. If suppose you are trying to invest 10 lakh in a particular year, then one share you will invest 1 lakh. Then invest only 1 lakh in that particular, or 1 lakh if you want to invest in throughout a year, then and 10 stock stock prices, then 10,000 rupees per stock prices. And the greed, you have earned profit, you have earned 20%, 10%, 30% profit. Now you are becoming greedy. I want to earn 50% profit. So fear and greed makes you undermine your skills. You will not be able to trade properly or invest properly. Forget me not. These are the rules one should always follow while in the stock analysis, while in the stock market. What are the rules? Forget the news. Don't look for the news. Just see what the chart is saying. Don't overtrade. If you are losing in a stock market, then keep a pause. Just see where are you doing wrong. Yeah. Have you done any kind of analysis wrong? Never let a profit turn into losses. It's just an example of being greedy. You are earning 30%, then you want to earn 50% or 100%. And one day what happened? Some big event happened, like Corona pandemic last year happened, when the stock market fell 10-20%. Yeah, all the profit would wiped out in India only. If you don't know what is going on, if you are not able to understand what is going on, then don't do anything. There's no problem. Yeah, it is better not to trade, it is better not to invest if you don't understand what is stock market. But it doesn't mean that you will not try to understand it. You will, because stock market is a good opportunity to earn your second income, but with dedication, but with discipline. Yeah, don't buy something because it is low priced, like penny stocks. 5 rupees stock, 10 rupees stock, 1 rupee stock, like Reliance Communication is not trading at 2 rupees. Don't buy that stock because just it is very inexpensive, very sasta stock, and buy hundreds of 5,000, 10,000 share. It will not give you any benefit. Yeah. Don't follow the crowd. What people are saying, don't follow this. You just see what your chart is saying. Yeah. Ban wishful thinking. Wishful thinking. I have earned 20% profit. I wish I could have earned 50% profits. Because after you take out your profit, suppose you are not greedy. You took out your profit at 30%. You took out 30% profit. But after taking out all your money with 30% profit, it went to give another 20%, 50% profit. Then you don't think, oh, I would have stayed in that particular stock. Don't, whatever you earn, you just enjoy it. You just rejoice. Don't wish I could have been in the stock market for longer period. I could have earned more. Had it been the case, and some big event had happened, or some market news had some operator had sold big shares of stock, and your stock prices had come down, then what could have done? Yeah. So don't have a wishful thinking. Now I'm showing you some of my quotes and the few quotes from topmost investor and the trader. Being a successful trader and winning in the stock market is a matter of skill. Skill is, as I told you, EMA 5 13, 26, volume, RSI, combination of these three. Plus, look at the chart pattern. Fourth is thing I told you, practice it. Skill, mature your skill, be mature in the stock market. Yeah, no, be skillful in the stock market and always be disciplined. Don't be greedy, don't be fearful. Don't try your luck in the stock market. Luck doesn't work in the stock market. Yeah. Jack Schwager. Alexander Elder, what did he say? A good trader watches his capital as carefully as a professional scuba diver watches his air supply. As I told you in the beginning, as Warren Buffett always says, don't uh, put all your eggs in one basket. Means you don't put all your money in one share. If you want to invest 10 lakh rupees or 1 lakh rupees in a stock market, then identify 5 stock, 10 stock, whatever you may wish for. Yeah, identify some good companies as per your analysis, and then distribute your uh, funds in different fund stock prices. Yeah. So watch your capital. Never lose all your capital by investing in one stock. If you can't take a small loss, sooner or later you will take a mother of all losses. Means if suppose everything, your analysis was perfect, you did everything correctly, you make a position, you bought some stock, but what happened? All the days are not green, all the days are not red also. But whenever you invested, what happened? After a certain period of time, after giving you 5% or 10% return, it started coming down. Okay. And it started giving you little losses on your capital. So exit that position. If in the wishful thinking that it will definitely come back to the its original price, it will start giving me profits. I'll wait for another 1 month. I'll wait for another 2 months. And you keep on continuing 1 month, 2 months, 3 months, you will pass 1 year also, but you will not exit on that position. What will happen? You are actually losing on the capital which you employed in that particular stock. So don't do this. The desire for constant action is responsible for most of the losses in the stock market. Yeah, every time you need to earn profit, it doesn't happen. Sometimes you will occur losses also, but your losses should always be lesser than your actual profit. You earned 50% on your investment and you lost 5% on your investment. The actual profit would remain always 45%. I'm just giving an hypothetical example. Yeah. Mark Douglas. You cannot control the environment. You cannot control how the stock market will behave, how the external factor, what is the government Joe Biden is doing, what Trump did, what Modi is doing, what Pakistan is doing. You cannot control those things. Yeah. But you can control what you can control is your analysis. To sharpen your analysis, sharpen your skill. These are the quotes by me. No one is allowed to cheat you in the stock market. If you think I am giving you this workshop, I'm sharing my insight with you, and you start doing some analysis, and suppose after doing an analysis you make a position in some stock, and they start stock going down, and you start saying that this Somesh Shukla was a cheat. He didn't know anything about the stock market, and because of whatever he told me, I did that only, and I started losing money. You see, I am no one to cheat you. Or nobody in the stock market is here to cheat you. You just see that you don't cheat yourself. If you are making losses in particular position, just adjust that position as I told you in the rule book. Yeah, stop loss is overrated, target price is underrated. People go for stop loss. When stop loss when a position is in the red or the losses, they don't go away. Yeah, but they don't wait for the target price to happen. A successful intraday trader is not a gambler, or the successful investor is not a gambler. He has studied the market, he has studied the sector, he has studied the geopolitical scenario, the world market. Then only he has invested in that particular stock. Yeah, he's not a gambler. And also, the great gambler never gambled for gambling. Yeah. The the other quote is out there price is God. Bhav Bhagwan che. Yeah. Price is God in the stock market. And emotions are energy within you. Fear and greed is the emotion. So you have to channelize your energy diligently, carefully, so that you don't lose maximum in the stock market. You earn maximum, but you don't lose. That's all, my dear friends, from my side. Thank you very much. If you have any questions, I am happy to answer.
Hello, this is Indrajit. It was a very wonderful seminar. My question is that if like I can take the example of BHL, it was going down and coming up after a long time, but its announcement is not good. Then how to follow that? Like it is good to buy that share market of the BHL or not to buy? Like what you told many times to look into the chart, but uh, we are busy with our task. Like I'm a software engineer, I will be busy with my task. I just put 10% of the money. Then how to do the due diligence in very less time?
So, you see, first thing, I don't know, I'll share one more screen. Uh, Maybe I'll tell you how to, like, as I told you, investing.com, you go to investing.com, yeah? It's a charting software freely available to everybody, okay? You just put BHL, Bhil chart and just see, apply those parameters, 5 MA, EMA, 8 MA, EMA, 5, 13 and 26. And basically you just make a judgment whether you want to go. Because I personally don't like BHEL share, yeah, to be very honest. And whatever I told you, that would definitely work in the stock market. Because I have been following this for last 7-8 years. Acha, I got, hello, are you satisfied with the answer? Hello?
Yeah, I got your answer. Thank you.
Somebody has asked me, how is RSI calculated? What is the underlying formula? You see, RSI, there are two values. When the RSI is above 60, then we consider it to be the bullish. And when RSI is going below 50, say around 40, we consider it to be the bearish. So how RSI is calculated, you don't go by how that RSI is calculated. RSI is also an indicator, as I told you in my slides. It is a kind of a line, which is calculated over a period of 60 days, the period which you want to select. So I usually select 14 days period. So in last 14 days, how the price strength has been, if it is above 60 or it is below 40. If in the last 14 days, if the price has all been consistently moving at around 60 and above, then we consider it as a bullish signal. Which book is the best to get complete knowledge of stock market from basic? So there are, first of all, don't go, so investopedia.com. I don't know, I have not read any book, so to say, because I have been into the stock market for like, it's not 16, 17, I have been started doing, when I started doing my job only. And just by reading on Google, you get all the information. Watch good YouTube videos. There are plethora of YouTube good videos. Okay, for students only, I am telling you. I'll get back to you, because I need to focus on what books I need to tell you, because it would be very on the higher side to tell you some book which you may not be able to understand. Yeah. So investopedia.com is a good resource available on the internet. YouTube videos are good resources available on the internet. Just look at those videos and those websites. You will start getting good insight of the stock market. And NSE site, National Stock Exchange, has also one website on their one section, Pathshala, which has all the basic knowledge of stock market. Yeah, how to avoid getting trapped in false breakout. How to avoid getting trapped in false breakout? As I told you, as I told you, EMA 5, 1326, EMA, RSI, and volume. These three things, and you won't get trapped in the false breakout. Because what happens? Suppose if the breakout has happened, do you would you invest just on the breakout only? You would not wait for say one more days. There may be one breakout, two breakout, three breakout. How many breakout? It gives maximum, as an experience, I'll tell you, maximum of 5 days. Uh, in an interval of 5 days, if the breakout is false breakout, then breakout would never sustain after 5 days. So when the breakout has happened, just wait for another 2 or 3 days to make a position. Then there would be less chances of being trapped in the false breakout. Any other question, boss?
Sir, I hope there are no more questions. If anyone has any question, please unmute yourself and please go ahead.
Like as you mentioned, like watch some of the YouTube. Then, with your experience, can you suggest like what are the YouTube channel we can follow? Because there is so many YouTube channel, and generally I follow that Geo News, but I do not find much interesting. Then, could you suggest some of the YouTube channel which we
I
can go?
I would give me little time, because there are good videos I have, but I have not in last 1-2 years I have not seen any of those videos. I have to look for it, and definitely I'll tell you. Give me little time. By tomorrow I'll get back to you on the videos. And the one person has asked me the books. I'll suggest book also, which are good for a student from basics to advanced level. It will give you. Yeah.
Thank you and have a wonderful day.
Because I have not been watching YouTube videos, but I know for sure must be some very good videos available. They keep updating. Yeah.
Sir, thanks for the wonderful session. Okay, sir, my query is like, you do you have any suggestion for value investing, or apart from this, you are given 20 points that actually clarifies everything. Specifically, I'm asking for the value investing, sir.
So value investing is like fundamental investing, isn't it?
Yes,
So,
sir. Yes.
so I, as I told you, those pointers, my investment in the stock market. So I do investment, I do trading. So I'm a trader first and an investor second. Yeah. So my investment is thoroughly based on those points, like
Okay.
The book value per share, or go to the chartinc.com. There's one good
Okay.
site, chartinc.com,
Mhm.
yeah, which has what do you say, some parameters. If you want, if you search fundamental investing, yeah, it is a free website, and so many investor and trader have built few queries. Yeah, basis this you will get results of stock prices which qualifies those pointers, and you will get good results. So you can use charting.com for that. And personally, I also have that query which I shared here. I have that query built in charting.com. I use that as for my value investing or the fundamental investing. All my stock like Tata Elxsi, Tata Motors, I invested in Tata Motors based on this fundamental investing at 112, and now it is trading at 356 something. Yeah, in a period of 7 to 8 months. This is based on those 7, 8, 10 pointers which I gave in fundamental investing. So in a stock market, I'll tell you, the simplicity is the beauty. Like if you get a plethora of information, if you get plethora of indicators, then you would tend to lose the confidence. You tend to go. What do you say? You tend to lose the confidence. Also, you tend to lose the crux of the matter. In a sense, you will not get the confidence to invest in that particular, because if you are using 100 pointers, there may be 2-3 pointers which will give you a signal that you should not invest. There may be 2-3 pointers or 7-8 pointers which will give you not to trade. Then how would you do this? Minimum number of indicators, minimum number of pointers, and then if you give you a good value, then you go blindly invest in the stock market.
Thank you, sir. So one takeaway I can take this from your session is like, don't follow the crowd, believe in your practice and have a strategy, then money will come. That's a byproduct.
Money will automatically come, Baba. You
Yeah.
see, I myself is a trader. I lost when I started doing trading in 2017. I lost 7 lakh rupees. Yeah,
Okay.
7 lakh rupees in a matter of 4 months. And but I had a belief in myself, and I practiced uh, when I started earning profit. And now I earn what I used to earn. What was my yearly wages I earned in like in a quarter. So have a confidence, go slow. When you start getting confidence in your strategy, in your analysis, then you increase your uh, capital in the stock market.
Okay. Sir, as you said, loss is inevitable. Like even if you have,
Yes.
even if you identified the value stock based on the strategy which you're given, okay. But after you purchase purchase the share, it may go down. Okay, that is unavoidable.
Yes,
But
yes.
we need to find the stock that, like, maybe don't put all the eggs in one basket. Like diversification and investing in different sectors, that will give a balanced stage.
Yes. Diversify your stocks, and you know the support line, na?
Yes, sir.
When two things. One is support line, second is stop loss. If 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 it is touching at the support line, and if you are not having a confidence, it may touch your stop loss. Then exit half of your position. At least you will manage your
Don't.
risk that way. If it may turn into from support line, it may again bounce back. Yeah, or it may happen from support line, it may hit your stop loss, but you have already taken half of your money at a support line. Then even if it hit the stop loss, you will tend to lose minimum amount. Yeah, because you have already taken out your half of your money in the stock market. So what I'm trying to say is this: go play blindly, but with calculated risk, with open eyes. Go blindly, but with open eyes. Blind in your have a faith in your analysis. Yeah, I am free for coaching. I am free for everything. You give me hundreds of ideas. I'll tell you whether it would work or not. I may also be wrong. You see, but to gain yourself a confidence, I am free for you. And free for everybody in this conference. Yeah,
Thanks, sir. Thanks for the knowledge.
I'll give me my WhatsApp. I'll give my email ID, everything. Share me the chart. Share me with the sketches, like where is the support line, where is the trend line. I'll give you, advise you whether to invest or not. Yeah.
Sure, sir. Hopefully, maybe you can start a YouTube channel, share your wonderful knowledge with us.
So there are, as I told you, there are plethora of YouTube channel, plethora of information uh, available in the. But I am not into this thing because sabhi log gyan, everybody is distributing gyana. There must be some person who should not distribute gyana on other platform. Like, no, I am free, available, free for forums like this. Yeah.
Thanks again, sir. Thanks for a wonderful time and session. Yeah.
I hope there are no more questions, sir. So shall we terminate our session over here?
Perfect. Yeah, it was really wonderful session, Prashant, and the participant were really nice, very encouraging session. I hope to conduct a few more sessions with you because, as I shared, I am not available on YouTube. I am not available on other platforms, but closed user group, those who want to really learn, I am freely available. Those who want to take maximum advantage, because I have learned from my mistakes. So I don't want others to make mistake and then learn, because they can gain from my experience. So It's a wonderful experience for me too, and hopefully to have a few more sessions like this, and let's get going. Yeah.
Yes, sir. It was a really wonderful session, and the enthusiasm from the crowd was really great. Uh, I was observing that while people were asking you the questions on the different aspects of the stock market. We really enjoyed the session, and we hope we might again conduct such session in the future. Sir, will you be able to provide the presentation? Like some people were
Yes,
asking.
yes. Yeah, yeah, yeah. I'll send you on email. Will
Okay,
that
sir,
be
that
okay?
would be fine. I'll then circulate among all the other people.
Perfect, perfect, perfect.
Okay.
So
So I
thanks a
really
lot.
would,
Yeah,
yes, sir.
yeah.
Yeah, I would really like to thank you for this wonderful session and taking out time from your busy schedule. Thanks a lot, sir.